All right, here we are, Bubble Bath Part 2. This is a real treat for me. We're talking about gold and whether gold is in a bubble. I am a gold bug. I like gold. I like the gold standard. If you ever talk to me about this in person, I will talk your ear off about the Bretton Woods Institution and how that worked, how the international monetary system worked during the post-war period after World War II. I thought that was really great. I missed that. Wish I would have been alive back then. Frankly, I thought it was, a really impressive achievement, both in terms of economics and also in terms of international politics, of getting everybody on the same page about that. But that's neither here nor there. We're talking about gold. Gold recently went over $4,000 per ounce, which is a record price. And so, I've been doing a lot of research on this to see whether this is a bubble or not. And so again, I'm trying to check my own biases at the door. But my tentative answer is not yet. I think that the fundamentals, I just talked about how all the fundamentals for AI are really poor. I think the fundamentals for investing in gold are actually quite good. Central banks all around the world are buying a lot of gold, partially on purpose and partially not. The United States, the US dollar is losing value. That's partly on purpose because of the trade policy that the Trump administration is pursuing. If you make your currency weaker, it will make your exports relatively cheaper. So if the idea is to promote domestic manufacturing, then devaluing your currency is a good idea. China's been doing this for a long time. The Trump administration, actually, the first time around, this was one of the big things that Trump ran on in 2016, was talking about how China is cheating in international trade. So I guess if you can't beat them, you join them. That's kind of what the Trump administration is thinking, in my opinion. And so because of that, because the United States dollar is losing its status as a reliable store of value, central banks around the world are selling off their U.S. Treasury holdings and buying gold instead. So that's a big reason why gold is moving so high. Gold always moves up. It's, considered a hedge against economic downturns, economic recessions. And so, we've had off and on recession fears since 2020. Gold hit a previous high in 2022 and then corrected after that, and now it's come back up. 2022, obviously, that was the height of inflation that came about after COVID. Some people would argue that was because of increased government spending. I think that's a load of poppycock. Personally, I think that it was almost entirely based on the supply chain disruptions that happened during COVID. And now, gold is up again since then. In the United States, we kind of, during the Biden administration, we basically navigated the economy about as well as we possibly could. I think I've talked about that in a previous video, talking about the Federal Reserve and Lisa Cook in that situation. But I think that the Federal Reserve did about as good a job as they possibly could. I think they steered us into a soft landing, or about as close to it as possible. Obviously, the Trump administration is now trying to retcon that with the labor statistics that they're changing around. I will use the same phrase again. I think that's a load of poppycock. I think it's very convenient that they revised down the job number by 911,000 the week of 9/11. I think that's very, very convenient. But this is all neither here nor there. That's just kind of general notes about the United States economy. And the reason why that is relevant to this gold conversation is, again, because of the trade policy and because of the general use of gold as a hedge against economic downturns. So I think the central bank buying is a huge factor in why I think gold is not in a bubble yet. Also, if you look at the profits of gold mining companies, they are crazy right now and they're trading really, really cheap. Zijin Gold is a Chinese mining company. They just had their IPO earlier this year. It was the second largest IPO of the entire year. Let me see if I can find the exact number on that. I don't think I have it written down. I'll have to go back and take a look at that later, but it was a huge IPO. And these mining companies are trading at like 4 or 5 times earnings. So really, really good stuff there. Looking at some of the investment community perspectives on this as well. Goldman Sachs, they revised up their gold projection for the end of 2026 actually twice. They revised it up to 4,300 a few days ago, and then earlier this week they revised it up to 4,900 because the September trading was so strong. Their kind of justification for that is that, you know, they reference the stuff that I talked about with the central bank buying. They also mentioned that you know, gold production and gold ETF holdings are way higher than they were projecting, but it's still a really small market relative to the size of the stock market. You know, it's about 1.5% of privately owned US treasuries are, you know, that's the value of the gold ETF holdings that are held privately. So there's a lot of room for it to grow. They recommend, this is from their $4,300 prospectus, they said they viewed a mid-single digit portfolio allocation to gold bullion as optimal. I think that's probably still about right. I think 4,900 is really ambitious. I think that that's just kind of, that is a little bit momentum driven, and that gets into the more bearish perspective that I read about. This is from Paul Ciana, who's a technical strategist at Bank of America. You know, he didn't look so much, at least from what I've read, he didn't look so much at the kind of fundamentals of the market. He looked more at the market behavior. Sees this as kind of, you know, speculation and momentum driven buying is the exact wording that he used. He's, you know, the reasoning behind that is that gold is trading above its moving average for the past 200 days by about 20%. If you look at the last times where gold had a correction, it was trading about 25% above moving average for the last 200 days. So we're getting close to that. You know, I think that would be, you know, if we're at $4,000 right now, you know, 4,300-ish per ounce, that's probably about the level where you'd be at 25%. I'd have to run the numbers, but I mean, you know, I think that original Goldman Sachs prospectus number is about right. Just for a quick different perspective, you know, again, looking at the share of gold ETF holdings relative to the entire equities market, a different team at B of A looked at this and they said that the share of gold relative to equities is a lot lower than it was at those previous peak times of gold. So that's, you know, that's another reason to be long on gold still. That ties into the idea that, you know, if any, you know, sizable amount of investments from fixed income, so, you know, bonds or money market funds, if any of that gets shifted into gold, gold price could still go up quite a bit. So yeah, all in all, I like gold. I think you should keep holding gold for a while. You know, the big hole in Paul Ciana's argument is that gold could really quickly sell off if consumer sentiment flips. And to me, like, I don't see any compelling reason why it would, you know, kind of like what I was saying with the US government earlier. Like, there's really no reason to believe that the US government is competent. You know, they're pursuing this kind of half-cocked trade policy where they're trying to implement these tariffs before we get actual investments on the board to bring back US manufacturing. So that's just going to cause short-term pain. I'm not, you know, I don't think using tariffs and bringing back domestic manufacturing is a bad idea at all. But I just think the way they're doing it is really haphazard. I don't see any reason why consumer sentiment would flip, especially, again, looking back at the AI segment that I looked at before. That is such a big portion of GDP growth that we've seen in the last year is from these AI data center investments that I just don't see a world where consumer sentiment is going to flip that hard. You know, I think that the US economy is in a really tricky place. And so, you know, just like any other time that the economy is in a tricky place, gold is a good investment. That's just me. Let me know your thoughts if you feel so inclined. I'd love to hear a different perspective on this. Thank you.